Hey folks, my name is Gareth Soloway, Chief Market Strategist and Master Pro Trader here at InTheMoneyStocks.com, and for crypto, VerifiedInvestingCrypto.com. I want to go over oil today, folks. This is an amazingly good educational piece I'm going to present to you, and it's going to show you why oil may have a little bit short-term upside, but ultimately I expect it to get a big collapse back down, probably sub $50 a barrel. And considering you're nearing $90 a barrel here, that could be a very profitable trade if taken at the right point. So what we're going to do is we're going to go back into history, right? History is the greatest place to look at charts and see what could happen in the future. And again, I want you guys to understand this. Things always replicate, all right? They may not be precise in terms of replication, but they almost always rhyme. We need to understand that as a trader. All right, so number one, this is the chart on WTI. You can see the run we've had in WTI has been tremendous to the upside. Short-term highs, I think we're at the highest on oil since about 2014. Now, this is going contrary to the S&P 500, which has broken down, right? So we saw this channel on the S&P 500, and the S&P 500 has collapsed below this channel, breaking down. We've seen the NASDAQ really take a big beating, the Russell taking a big beating, and so forth. But what I want to show you is this, is that history shows us, especially from 2008, that the stock market tops first, and then you see a rotation of big money. So the point is, when you have a major top in a market and a bear cycle begins, money doesn't just exit everything, right? It rotates initially before finally exiting everything. And with oil, what I'm going to show you here is we've seen the move up in oil, but let's go back to 2008 and see what was going on. Here's your chart of 2008, right? And you can see oil had a run, amazing run from basically $50 all the way up to $145 per barrel before an epic collapse, bottoming when the stock market bottomed in 2009. Right now, it bottomed around $33 a barrel. Now, if you look at the S&P 500 here, all right, on that same chart, let me flip over to the correct one here. All right, here we go. So if you look at the S&P 500, you topped out back in 2007 and continued to collapse. So again, if you match up the charts, the S&P topped in October of 2007, while the oil trade continued to surge relentlessly until July of 2008. Now, does that sound familiar here, right? So if we look at the current chart on the markets, you can see oil, the S&P 500 has already started to roll over, while WTI has continued to push higher. So essentially what you can say to yourself is this, is that in the beginning of bear cycles, all right, this is important, that money doesn't exit the market in its entirety. It looks for areas to hide. At this point in time, it is rotating into oil just like it did in 2008, while the stock market is starting to decline. The way it shows us and what happened in 2008 is that when oil started to collapse, it had an epic collapse and it bottomed. It basically played catch up on the S&P 500, right? So again, the S&P 500 bottomed in February and March of 2009. Oil also bottomed in February, March of 2009. So once oil began to collapse, it basically played catch up with the stock market. In other words, money finally started to flee everything as panic was ensuing during the financial crisis, and everything bottomed at the same time. Now, why this is important is this. It tells you that, again, right now we're in the beginning phases of a bear market. And ultimately what I expect is for us to see oil continue up in the short term, maybe a little bit higher, but eventually starting to curl over. The Kickstarter, just like in 2007, 2008, is that the Fed began to tighten interest rates, right? They began to raise and tighten. And what that did was it started to kill the stock market, and oil still did well because the economy was doing well. As things got worse on the tightening phase, the economy started to sputter and go into a recession and almost a depressionist type environment. And what that did was it destroyed the demand for oil. And so if you look at what the Fed is doing right now, they're doing the same thing, right? They're very hastily trying to tighten. They've already talked about tapering, and which they're doing now, raising interest rates by March maybe, and then also taking away their balance sheet, lowering their balance sheet, getting rid of their balance sheet, which is at like $9 trillion. My thesis here is that oil in the short term, while the economy, and we had a GDP print yesterday of 6.5%, which is tremendous, that will be good in the short term. It's a place for smart money to hide for now. But ultimately, when the Fed does raise too much, which they inevitably will do, the economic situation will see a drop, we'll see a recession, and then oil will catch up to the declining stock market very, very quickly. So again, to go over this, the idea is that look for maybe a little bit more upside on oil, maybe $90 to $100 a barrel potentially, and then look for a meteoric collapse as the stock market continues to drop and the economy begins to go into a recession due to the Fed hiking, and really the stock market declining is going to push the economy to slow down, as well as the wealth effect from an up stock market and cryptocurrency has now been degraded and starting to reverse. Hope this makes sense to you guys. I think it's a fascinating thing to think about. Most people don't kind of put these dots together. My job is to help educate and help you guys see things that you may not usually see. That is my pleasure. Again, come check me out for crypto trades at verifiedinvestingcrypto.com and inthemoneystocks.com for swing trades on stocks. Both services have great educational videos I do every single day. Take care, folks.